Okay, so we have this judge in the US claiming that Google is acting as a monopoly in two markets: one, search; two, advertising. He says this, and I quote, "Google is a monopolist and it has acted as one to maintain its monopoly." And now, because of this, you have some analysts predicting a black swan event, but then on the other side, you have other people seeing this as a value play. No decision has been made yet. The result is still up in the air, but Google just closed at all-time highs. So are investors actually worried? Let's talk about it. I'm not going to go into depth about the antitrust lawsuit just because it has been around for a while now. So I'm sure there's a lot of information about it circulating online. But it essentially boils down to the fact that this judge has found evidence of Google acting as a monopoly and wants to punish them. Some people, I understand, may not want to use the word punishment because it's too harsh or whatever. But that's just how I see it, because it's like forcing a team to bench their best player just because the other team can't score. But anyway, what are some of the ways that the Justice Department wants to punish Google? Well, one way is forcing them to sell Chrome. Another way is by ending the multi-billion-dollar contracts that Google has with companies such as Apple or Samsung to be their default search engine on those devices. And then you have a third remedy, which would be for Google to share their search data with their rivals. Now, the interesting thing about the multi-billion-dollar contracts is that with Apple, for instance, Google reportedly pays them around $20 billion a year. For Apple, these payments make up around 20% of Apple's services revenue, which, if you look at it, is really the only segment within Apple that's seen any meaningful growth over the years. So that's a pretty big deal. And I don't think a lot of people are paying close enough attention to it. Because if we look at the growth of Apple services from 2023 to 2024, we can see it increased from 85 to $96 billion. If Google's payment had not been a thing in 2024 or even 2023, then the entire company of Apple would have been very close, if not contracting. So that's just to say the ripple effects that the termination of these contractual agreements may have could be significant to Apple especially, but maybe to other companies too. So it's definitely something to pay close attention to when the result of this ruling gets announced. The selling of Chrome was another one of these things that the judge was talking about. And because of this idea, you have analysts like the one in Barclays say that the selling of Chrome to a rival like OpenAI or Perplexity could lead to a 15 to 25% drop in Google's stock price. Now, those numbers sound a little crazy, but in all honesty, I don't see why something like that couldn't happen. Chrome is such an important part of Google's business. More than half the world uses Chrome. And the reason why it's important is, well, one, it makes up around 35% of Google's search revenue, but it also drives users and keeps them within Google's ecosystem. So let's take a user searching for something using Chrome, right? Along the way to their destination, they may be met with particular advertisements. Advertisements is, of course, a large part of how Google makes money, especially targeted advertisements. And so you force Google to sell Chrome, and a large chunk of their revenue stream is now not there. And so once you factor in situations like that, you can kind of be at peace with the idea of the stock price dropping 15% or even more. So when you look on the surface of things, the ruling against Google, if it goes about and happens, does not look great. But then on the flip side is where things start to get a little interesting, because there is a world where a breakup of Google services could actually create way more value for investors. Have a listen to this.
YouTube, Cloud, and Waymo are trapped under one roof, valued like a search business. And that's why so many on Wall Street are running these so-called sum of the parts math, basically putting a price tag on each division, with YouTube's standalone value projected to be close to $500 billion, search at $1.25 trillion, and Cloud at about half of that. You add them up and it would tack on $600 billion to Alphabet's market cap.
Now, I'm sure Alphabet doesn't want to go down this route of having to split up their services. I'm sure they don't want the headaches or the cost of losing their ecosystem. But let's say they're forced to carry out these breakups. The spin off companies like YouTube would probably be valued like a Netflix. Waymo could be valued like an Uber, and so forth. So these spin off companies could then go on and outperform the single version of Google because they'll be valued as a separate business rather than us as investors applying a conglomerate discount. Here's how I see it. Short term, once remedies are announced, if they are announced, they were supposed to be announced in August. Maybe we'll get something in September. But if they are announced, I'm expecting volatility. The stock could dip 15, 10%, 25%, who knows? But I think traders and nervous investors will sell first, ask questions later. Medium to long term, Google or Alphabet, they'll be fine. They have enough dominance and cash to survive this storm. So I think regardless of the outcome, I don't see it being the end of the world. It's just a really messy situation that will cause some unexpected behavior, as we've already been seeing. So as this drags out for a couple more years, due to my assumption that Google will appeal any of the remedies if there are remedies, and so we can see choppy price movement for some time to come. In terms of my investment decisions, I'm not going to put in any more lump sums into Google at this price, just because I think it's approaching fair valuation. I'm still going to dollar cost average small amounts as I do with all my stocks. If we see any choppy price movements, especially in this month of September, where the stock market historically drops a little bit, then I may deploy some cash there.